Chinese stocks taking a beating on economic pressures. The country's blue chip index closing down more than 2% today, which is the biggest single-day drop in 6 months. Now, our next guest has been warning that China's economy is in trouble due in part to the real estate collapse. And Dennis Unkovic is a partner at Meyer, Unkovic and Scott, and he advises U.S. companies doing business in China. Also out with a new book this week called The Fragility of China, Breaking Points of an Invincible Regime. Dennis, great to meet you and have you here. I know you and Kelly know each other well, but tell me, is this China thing going to get that much worse?
Yes. You like long answers, but the answer is yes. China has been in a declining position for at least 4 years. It wasn't just COVID. There were a whole bunch of things that came together. And in my opinion, the economy that they have is really going to continue to deteriorate for the foreseeable future, because a third of the economy is based upon real estate, and real estate is essentially in the tank.
Can they thread this needle somehow? I mean, a lot of people thought when the U.S. started raising interest rates that our real estate market was going to go through something very different than it has. So is there a way that the hyper-planned Chinese Communist Party can figure out a way out of this?
Xi Jinping is a control freak, and so is the CCP. There's nothing they have done really in the last 2 years. What they did over the weekend is they decreased the bank rate that would be charged by 0.1% or 0.1%. That's essentially nothing. And I think that because this happened, the markets in the U.S. are the same as the markets in China. People see something and they don't like it and they react. And as you said a few minutes ago, their economy's down the worst. I mean, the stock market's down the worst as it's been in the last 6 to 8 months. And it's going to get worse. I'm sorry, Kelly.
No. I was going to kind of build on that. They had the plenum last week. I didn't honestly have, with everything going on here, whatever people were expecting, it sounds like China didn't deliver. And I don't know why we keep being surprised that Xi Jinping is sticking to this centrally planned model where there's not going to be movements towards any real liberation that would kind of revive a market economy.
Kelly, Xi Jinping does not want anything that will disrupt his overall plan. And as a result, I think you're going to see him, in the long run, sticking with security, what is China, as opposed to what could I do to help the economy. Otherwise, they would have done much more recently.
But listen, at the end of the day, we're all fighting with GDP. I mean, you need to be able to fund, even if you have, myopic global aspirations, you need to fund that somehow. And I just wonder if he realizes at some point he needs that dry powder to come from somewhere, and a market economy is still the best way to deliver it.
It is the best way to deliver it. But to use the GDP statistic, in the U.S., we owe about 129% versus our annual GDP. In China, you know what it is? It's about 300%.
Wow.
So they have borrowed money again and again and again for the last, 20 or 30 years.
All the more reason why they need GDP. So why not nudge towards a market economy that can service that debt, support military spending, and all the rest of it?
Because he's spending too much in the military. And I think that's one of the reasons they're 7 or 8% above what they really should be. And as a result, he's in a position where what's going to happen to the economy, I don't care. I want to be in control.